David Herro, Harris Associates partner, deputy chairman and CIO, joins us now to break down some of this action. Good morning, David. I know you go stock by stock, company by company, and all over the world. I'm wondering, after we've had a little bit of slippage in the cyclical and value leadership in the last several weeks, is your work taking you to different kinds of companies? Do you still think that it is a kind of global reflation and cyclical dominated market for a while?
I think a break was to be expected because of the strong performance of these, we'll call them economically sensitive names, but I still think we're in the first third or first 40% of the move. When you look at valuations, and when you look at the businesses that will benefit as the global economy rapidly expands, I think this is really the space where you're going to see the best price performance. And you still see huge discounts on these value-oriented names, whether they be industrials, financials, material companies. I mean, in many cases, these are still trading at single-digit price-to-earnings ratios, going into a period of what should be very, very strong earnings growth. So I do believe that even though there has been a little pause in this sector, that this is where you'll get revaluation given the positive news they face over the next 12 to 36 months.
Yeah, this moderation in that leadership in those areas did coincide with, Treasury yields topping out for a bit. Now we've had this somewhat unexpected reduction in yields. It's a question about whether, in fact, global growth is going to remain as strong in all parts of the world where they're not as far ahead on vaccines. So has anything changed that the bond market is indicating to you, or is it more noise?
I think it's more noise because what you have happening is a phased opening of the global economy. And I would say, thankfully, it's been a phased opening, because if we were to flip a switch, the global economy would open all at once. As you can see already, our logistics and supply systems, there's too many bottlenecks already in this phase. If we did it all at once, it would be worse. However, the phased reopening will mean for greater longevity. And this will be better for these businesses. This will be better for these companies, that they'll be given time to build up logistics and supply networks and to be able to fill the channels through time. I think this is, it's, in a way, it's sad for the people within the economies that are still partially closed or locked down, but it's probably better for the sustainability of global economic growth to have this type of phased reopening. So I think it will lead to more longevity and sustainability of the recovery, which will pressure interest rates, which will give us stronger growth for the medium term.
Shepard Smith here. Thanks for watching CNBC on YouTube.